Hey everyone. As you're probably aware, there's a lot of uncertainty in our economy today. The Federal Reserve here in the US has raised interest rates several times in a row to a rate above 5%. This is above what's called the neutral rate, meaning an interest rate that is not restrictive or stimulative to the economy. Now, some theories suggest that that rate is between 2.5% and 3%. So, with the Federal Reserve setting interest rates at 5%, it's in a significantly restrictive territory, causing economic activity to slow down. What I wanted to do in this video is go over how all of the economic uncertainty that's around in markets today could impact QuantumScape stock investors. So I wanted to make a connection, even if that's not a strong connection. I just wanted to make a connection between the economic uncertainty and what it could mean for QuantumScape stock investors. So that's what I'll try to do in this video. So let's begin. So what I wanted to show here is QuantumScape CFO responding to that question that a Wall Street investor posed to the CFO, asking, "Can you talk about how the company is navigating the macroeconomic uncertainty and the banking system strain that we witnessed in the quarter?" Now, one of the consequences of the Federal Reserve raising interest rates was that it caused a lot of strain in the banking system, and many banks had to be sold to other banks or failed overall. So, how is that? The analyst is asking, how is all of that impacting QuantumScape stock? So, the CFO starts with highlighting the strength of the balance sheet. They ended the quarter with over $1 billion in liquidity. Now, if you look at how much cash they went through in the most recent quarter, it was around $60 million. So they have 1 billion in liquidity and they went through just about 60 million in the quarter. Now QuantumScape does not have a product that is being sold just yet. So for them, their priority is um, utilizing the cash that they have on hand effectively enough to get that product to market. So that's their primary task, is effectively using the money that they have on hand. And so management, the CFO saying that they have enough cash extending into the second half of 2025. So with the money that they have on hand right now, that should serve them all the way until the second half of the year 2025. Now, that's plenty of runway to get QuantumScape through this economic uncertainty. It's unlikely that the economy will be in a slowdown through this entire time until 2025. Partly because of the reason I mentioned earlier, with the Federal Reserve having interest rates above the neutral territory. If the Federal Reserve observes that economic activity is significantly below where it could be, meaning if there's a recession and there's a lot of job loss, then the Federal Reserve could lower the interest rate back down closer to neutral territory and even below that to stimulative territory to get the economy back on track. Now, that is, of course, if inflation comes back down. And typically, what happens when there is a slowdown in economic activity, inflation also comes down. That's why the Federal Reserve increased interest rates to begin with, to bring down economic activity, to bring down inflation. So, given that the company has enough cash to go until the second half of 2025, they should be okay. Also, the CFO is saying that they filed a $400 million at the market perspective supplement, meaning that they could raise $400 million in selling their stock if they need to. Although I will show you this, QuantumScape stock price is down over 95% off its highs from 2021. Why am I showing you this? Well, if they want to raise money selling their stock is down significantly off the highs. I don't know if they want to sell more of their stock at these values, diluting shareholders at these prices. So I think they might want to hold off on doing that unless they absolutely have to, or unless they see an opportunity, such as watching this stock price shoot back up. If they see that, then they can say, oh, there's an opportunity. We can sell some of this stock to raise $400 million, and we won't have to sell too many because the stock price went back up. Now, unless the stock price goes, shoots up, I don't think they would prefer to do that, although they might. Okay. So overall, I think that the company is okay. They're not going to raise money if they need to, but they can. Also, here's a benefit. They've invested their money in treasury funds in what they view to be a conservative manner in duration of less than 18 months. So short-term government bonds. More than 75% of their portfolio is invested in US government bonds and AAA money market funds. So one of the benefits for QuantumScape is going to be that they're going to earn a higher interest on the cash that they have on hand. They're going to earn higher interest. So that's going to be a benefit to them in the near term. They're going to be able to generate a greater degree of interest income, which can fund some of their operations and give them a longer runway until they run out of money if interest rates remain high. So that could be one of the benefits from this economic uncertainty and higher interest rates, is that they get a greater interest income, which gives them longer runway before they need to raise more cash. Okay, but that's all I've got for this video. I hope I've highlighted some connection between the economic uncertainty and how that's impacting QuantumScape stock. Thank you so much for watching, and I hope I'll see you again soon. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.